Quick disclaimer, these videos are meant for educational purposes only. Anything said or shown in any of these videos are personal opinion and my perspective. Trading carries a high level of risk, so anything done is your responsibility. Hey, how's it going, guys, and welcome back to mentfx. Let's talk about whether what I do any given day when I show up, whether or not it's actually complicated or if it's actually relatively simple, right? And I'm sure a lot of you know the answer. Any day I show up to do what I do nowadays, if any of you lived with me in my little basement and I fed you a little bit of food every day and I told you to come up out of the basement so you can trade next to me, a lot of you would be very surprised by how simple the trading has become, right? We'd sit down, you'd sit down next to me and we'd go, okay, so here we are on UJ this morning. So let's go before this trade actually happened. So this is where UJ was this morning at around 8:45 a.m. I usually get on around 7 a.m. or 6 a.m. at the earliest. So 6 a.m. is when I get on. So right around here, we get on, we come up in front of it and we look at it at that time, okay, just like this. And we go, is there a trade opportunity here for us today? Well, we'd go through, we'd already have our preset bias on the actual week, which was done through the webinar and the Outlook, and hopefully you got to see that. But if you didn't, we'd go through it normally. We talk about everything as we have in our videos lately, right? With the fact that, as you all remember, we had a move to the top side, very simply putting in accumulation and a bullish model. You had another break to the top side, which goes hand in hand with what I teach in a private mentorship known as a double MB, or what is known in the underlying Dow Theory as a confirmed potential bullish trend. Price rebroke down, and as per the mentfx methodology, we had protected lows that were increasing and had then began to decrease, creating an institutional leg from this low to this high. And now, as a pullback is emerging, we expect this to be an underlying reaccumulation model due to the fact that the protected lows were increasing and were breaking down, but still sustaining its low. Very, very easy to see that. And then as price began to, on lower time frames, as per this indicator, which if you're brand new is available through mentfx structure in TradingView, for free completely. But again, you can find the rules as to how these work yourself and just start pinpointing these ranges yourself. We had a break to the top side, another break to the top side, again giving us a fractal version of the exact same thing, a double MB, also in tandem with that Dow Theory, to then expect the next institutional leg to take out this high, and due to the fact that we are trend traders, to hopefully, as you all know, and I made countless videos about these on my public YouTube, to continue a move higher and higher and higher. And that move would want to continue itself too, because we'd use multiple time frames here. Again, protected lows increasing, price breaks down. The expectation is that this is a reaccumulation, and price wants to continue to its next institutional high, which would be this high here. So once we understand that's the thing, especially on the daily here, we understand that the underlying models that are running this market, the underlying money, at least from a standpoint of the MBs or the ranges that have been forming using the mentfx methodology, and due to the SSCs, the structure, SND, confirmation, and then continuation move, are all pointing towards the same thing. And that's for longs to come in, longs to keep coming in, longs to keep coming in, to eventually, likely, because that's how we follow markets, to run this high and hopefully beyond, above and beyond. And again, just to recall back to last year, I sent this same kind of analysis to you guys back when we were back here in December of 2021, and I spoke about the longs that would come in from this SSC, and as they began to come in, I talk about it going through this high and then onwards. And if it didn't do that, to come in for one more SSC off the last down moves before the up moves, to come in and then make a large move, exactly as we expected now, but last year, or in December of 2021, almost 2 years ago. And if you guys remember, this is all documented publicly on my YouTube channel as well as privately in the mentfx.com mentorship. Those are the exact moves we were able to sustain, to follow, and keep following. And after this began to break down, we walked away for a little bit in allowing price to reaccumulate, to accumulate as it needs to. And now that it's back in motion, I've been making videos nonstop talking about these exact longs over and over and over again, telling you guys how we expect it to continue delivering, even through potential breaks to the downside. Because again, if we follow the things that you are taught here, you have increasing protected lows. As those protected lows increase, they break down. As they break down, we assume reaccumulation, and we can assume reaccumulation from prior S&D 2.0s, so that comes from prior S&D zones, or through prior SSCs as part of an absorption, so that as it occurs, we understand that even though this is lower, it still acts as a higher low because money's coming in, and we expect the run on the next institutional high, which would be this one, and hopefully onwards, right? So once again, the exact same models that I teach every single week, that I teach in the private mentorship, how to spot them, that I teach here publicly, are delivering, are continuing to deliver, and now are moving long. And from there, you understand that across timeframes, you can follow a certain number of things to actually look for entries, whether that be ICIs, simply looking for impulse corrections and impulses and looking to capture this move here as it impulses through to the next high, looking for lower time frame SSCs where you're looking to enter off of these or confirm them, or looking for 2.0 buildups, which can look like this as well, where you look to enter on that market and look to take it long for its given delivery, right? So even on the daily here, as we take a look, just to show you guys what's happening before we even look at today's or this week's price action, as price begins to move long, it creates 2.0s, that being the last unmitigated point that hasn't been mitigated, whether that be a candle or a wick, right? So this wick is unmitigated, never been tapped prior to price coming down, creating a 2.0. So very simply at these points here, any day that you're showing up, you're already either looking for longs or waiting, not shorting, but waiting for price to come into demand zones to continue longing. So it's a very, very important thing to remember, because a lot of people think that because they're long and because price has made a move, they should sell it into zones. That is not the case. Prices rarely actually come back to zones. Prices, when they're ready to mark up or run, mark up and run, right? If we go back to last year, when we spoke about this exact move here, it came back to the zone once to give you entries here, twice to give you entries here, began to build up 2.0s to give you some entries here, and from there created a move that very rarely pulled back. And at these exact moments, most traders were looking for pullbacks to zones, 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 to then shorting, but then wouldn't look for more zones and would continuously get stuck on the wrong side of the market. When instead, if they just focused on the bullish side, this is where they get to trade for beautiful bullish delivery. And then as prices do break down, they understand it's part of, once again, the reaccumulation model. And from there, as prices move higher, they use the last unmitigated points in price, right? They use the last unmitigated points in price, the last wick or the entire body plus wick, but I would use wick here because of the fact that this is still a leg. They could use that as an S&D 2.0 to start going long. And in a time where everybody would be using imbalances here to go short, or demand zones or supply zones here to go short, or supply zones here to go short, or any supply zone they can find, a trader that understands the underlying direction is very easily now getting involved with the underlying trend using the 2.0s, using lower time frame SSCs, or using basic ICIs and breakouts, right? Because again, if we take a look at this, this is right here, a basic ICI. Now you could have taken like a buy here through that and taken a loss. That's normal. You could have taken that buy with a bigger stop and taken that as a win. Again, that's going to depend on you. You could have taken this mini ICI here after it fails to start taking along through up and through this, and then you get a beautiful delivery, another ICI, again, not needing to pull back to anything, just taking the longs basically off of the actual price action ICI. Again, same thing, like you have multiple ICIs here occurring. These are all valid ICIs until they finally inevitably fail, because again, as a trend follower, you are going to get into trends until they inevitably fail. That's where your edge lies. And if you don't understand that, then you're going to be losing money. But notice how all these beautiful trades available to you, even on a daily, using a basic ICI based approach where you have an impulse, a correction, and then an entry through the next impulse, can get you into beautiful trades without price ever pulling back to any zones and potentially never pulling back. In this case, the only pullback that occurred was to create a reaccumulation model. So you'd have to guess where it's stopping, but we don't do that. Or through the first bit of bullishness that comes in and following the new 2.0s that are created through the absorption and then the continuation upwards through the next reaccumulation high, giving you that beautiful follow through last year. And similarly, this year, we've been following the exact same things. And, you know, I've shared this multiple times on my channel, so I do suggest that you watch my other videos. But once again, case in point, let me make this gray for you guys because gray is a nicer color. Maybe blue is, I don't know. I don't know how to feel about it. But again, the same thing happened here. You either get involved with the ICIs that are occurring within this price action continuously over and over and over again. I knew some people traded this in the mentorship, some people traded this one in the mentorship, some people traded this one, because these are all beautiful opportunities, even on a daily chart. So you don't even have to go lower, but there's going to be opportunities everywhere. And we've continued following this. And as price broke down, we instantly viewed that as an absorption, understanding this is acting, just like I've taught you guys a few times now, as a reaccumulation model. And all we waited for is clarity in the fact that money's coming in. And how did that look? Price began to go long, and from there you can either start following longs, or you can wait for demand 2.0 zones, which act as SSCs of some time frame, to come in, which is exactly what happened here, to now continue that move. And once again, we've expected nothing more all week long, and it continues to deliver. And if you were trading a daily chart, well, this is simply an ICI, so this could have been a trade that you take up through it. You know, I'm just giving you guys examples of how you could have taken this, but this is an example of a trade that you could be in right now, managed, partialed, and now at break even. This is also a trade right here that's happening right now that you could have been in. Maybe you protect the low or you protect a little bit more. That's up to you. But again, these are all, as I'm showing you these entries, or as I'm showing you these tools of long and short, or in this case, just longs, because clearly the market's been screaming one thing at you, it should be firing off little fireworks in your head going, holy shit, this is, you know, I could take one of the things that mentfx is talking about right here in front of me and create an entire trade plan out of it, as long as I adhere to rules, adhere to specific models, and just follow the underlying trend on any given time frame that I choose to be my time frame. And if you can do that, you're going to separate yourself from the rest and actually start to see success, rather than complicating your process and trying to predict every pullback, every flip zone, every zone that might be support, might be resistance, might be supply, might be demand. Why don't you understand how money moves into the market, understand how markets end up moving, how accumulations, reaccumulations actually occur in the market, and then following the telltale signs or the footprints of smart money or of big money to start getting involved, whether through SSCs like so, when money comes in, or through following it after it's been established. So clearly, if I came to you right now and said, hey, what's the direction of this underlying market given everything we just discussed? Your instant answer should be that it's bullish, it wants to move bullish, it wants to take out this high, just like I've been talking about for endless amounts of public videos now, and still people are finding themselves short on this, to continue going long. Now, I just made an amazing tool available to our private team, which is going to have more information, but also to the public team. So that's including you guys. And right now you can go and access it by going to mentfx.com. So if you just head over to mentfx.com, very simply like this, if you head over to mentfx, go to more and go to sentiment viewer. You don't have to pay me. Notice how you didn't have to join anything. Okay. Right now, this is beta. It's in testing mode. It's completely free. And you have access to all of this showing real institutional daily sentiment based on my understanding of prices, based on my way of viewing everything. So if we type in USDJPY here, what do you notice? 81% of institutional sentiment, you could say, is to the long side. So not only do you have a very, very clear context regarding where price is heading through the reaccumulation models, through the underlying movement of the market, through the 2.0s that are happening, through the SSCs, and through the fact that now a lower time frame is going to give you beautiful entries, has beautiful continuations now to this high and then onwards, and then potentially even further to get to this high here. Not only do you have the technicals confirming everything for you, right, showing you it's going long, but you also have institutional daily sentiment confirming at the highest effect where money's heading. And when you have numbers like these, you know that the underlying money, if you're just getting position long over and over and over again, because the underlying money is so much in your favor, even being wrong can result in being right. And just to show you the beauty behind this, right, if we look at like something like this, CHF-JPY, look at this number, 100%. And if we look at CHF-JPY right now, let's just take a look at what it's been doing, right? This is a joke, okay? CHF-JPY, 100% long, look at what it's been doing. Every other person that you might ask, if you have a mentor, go ask him to analyze CHF-JPY for you, might say something like, it's clearly bullish. You can expect a pullback now to at least this demand or this demand. And that's where instant money is lost, because this is pointing one thing at you, right? It's pointing bullishness. And remember from my previous video where I spoke about relative strength, you can use that to your advantage now. Because if you know USD-JPY is extremely bullish, then you know that CHF-JPY, GJ, and all those other pairs are likely to be bullish, right? Look at this. Look at this. 95% bullish on GJ. And if we go over to it, what do you see? extreme bullishness. So if all you're doing is looking at relative strength between XXX JPY pairs, like I taught you guys in my last video, to determine which ones are best likely to keep making big moves, and then all you do is follow a super simple system for entry, whether on a lower time frame or on the time frame you're actually on. So like you could be taking along here, stop loss under the low, looking to continue this up, maybe for a 1-to-1 if that's what you want to trade, a 1-to-1.5, a 1-to-2 or more, depending on how you trade. Then you already have a beautiful trade plan to utilize. And again, this is all made free to you. This is accessible right now in its public test to you, the person watching, to go and start to complement your analysis with where the underlying money is moving, right? Absolutely beautiful. Like look at Euro GBP here. This thing says 85% short. Let's go take a look at what Euro GBP has been doing, right? Like, and sometimes, as you can see, this is actually a good example right here. Sometimes your analysis will actually be contradictory to where the institutional money is heading. And in those scenarios, what do you think the best option to do is? Well, in those scenarios where the sentiment or the money is not in accordance with your underlying context, you can ignore that pair entirely, because in many scenarios, when they're both not in tandem, what that means is price could go sideways for a very long time. And as we know, as trend followers, we don't make money in sideways trending markets and money in markets that are not in line with everything that's going on. So instead, if we just take our time to go and find a pair that is moving in a specific way that is very, very clear, that I've been talking about for months now in front of you guys on this public channel, and we go and complement that with something that is telling us that pair is extremely bullish, its other pairs are super bullish, its other pairs are still bullish, its other pairs are moving bullish, then you know on average if XXXJPY across the board is showing crazy bullishness, even through relative strength across all XXXJPY pairs, and is moving long, and is undergoing the exact models that you're looking for in a market that you're expecting to go long, is moving long, is creating the 2.0s that go long, had created 2.0s that were moving long. So remember, I made a video on this for you guys a few months ago, but we spoke about this zone moving to make longs, and it did, started making the 2.0 longs. From there, we spoke about the next unmitigated point, which was this one, started making those longs. The next 2.0 unmitigated point started making longs. The last 2.0 unmitigated point that started making longs and ended up to be the long that started breaking the next structures and exploded to the top side. And from there, once again, we were looking to continue this move long, but it began to break down, at which point we walked away from the market. It broke down, we're still walking away from the market, and all of a sudden, bullishness comes in. And from that bullishness, the 2.0s that are now created, the same way as these did, the same way as this one did, are now starting to hold long. Now, prices will not always make their way back to the 2.0s. As you can see, they don't have to. That's not what we're looking for in markets. What we're looking for is this, which is a footprint that money has come in now. You could literally wait for this to come in, for this candle to be created, and even this candle to be created, and then at that point, you could make the decision to start following this long on a lower time frame. And now that you have multiple things showing you the same thing, you know that your longs are going to hold a lot of weight. So now, I take you out of my basement, you come up here to trade with me, and I go, okay, we've already proven that this thing is long. We've spoken about it. We've been speaking about it for months. You shouldn't be too confused about that. Things don't just change overnight. You need to understand how money flows. Big money that's moving markets at billions, trillions of dollars does not flip overnight. Many people think it does because they see a 1 minute chalky flippy and think that this is now the guarantee that price is going to start making lower lows and be ready for a pullback to get to this zone and completely break down and maybe take out the liquidity, right? We don't do that because we understand that big money takes time to distribute or accumulate. And I teach you guys how to spot that through models in my private mentorship as well as publicly, right? You guys have seen me be bullish on this thing since here for the longest time ever, right? So instead, we're going to complement the fact that we understand that the market is underlying bullish and is moving bullish with our actual entries on this time frame or any lower time frame, instead of forcing the opposite side, because we understand that the telltale footprints have shown us where price wants to head. And as a result, those are the moves we're going to follow. So showing up today on this given day, again, we don't even have to go to other time frames, but we can just for fun, right? 4 hours moving bullishly. And again, notice what it's doing. Let me ask you, protected lows are going higher. Price broke down. What is that? It's a reaccumulation model, right? Did price hit a random zone to go long? No. Many people want to short it now. People were shorting all week this week. In your mentorships, go check. People were shorting here and here all week. I guarantee it. Go find your mentor right now. Go find what he posted. I guarantee you there were shorts from here and here to get down to this area and this area. Please go and check and then leave a comment down below if I'm right. I'm willing to know, right? So many people were doing that. They wanted to short it. But again, it made the reaccumulation model the same way we've been talking about, from a higher time frame moving chart that's already showing you bullishness. So all we expect is bullishness. So we wait for that. And then what happened? Price began to come in bullishly. And what happened from there? The last zones that were created from the initial bullish push, making it a 2.0 zone, began to be respected and began the move. So you could have waited. You didn't have to confirm here, right? You could have waited. And as it comes in and moves away, what is that showing you? Money is now supporting the demand that's been created through the reaccumulation model, through the multi-time frame of the UJ, as well as the institutional daily sentiment, which is that price wants to move long. And all of a sudden, confirming longs on this time frame or lower time frame to start moving long is perfectly valuable and good to go. So now you could be someone that's a participant in this market via entering at this 2.0, entering inside of there to take it long, or waiting for money to come in as it did, and then start trading the ICIs higher. So someone taking this trade through the high as it moves higher, stop loss under the low or lower, has a beautiful trade that's now delivering. And notice how we can do this same kind of entry criteria because it's repeatable and consistent across all time frames. You could do this on a daily, a weekly, a 4 hour, a 1 hour, a 50 minute, a 5 minute, a 1 minute, because now you're actually with the money. So you have a way to create a system for you that you can use to get funded with mentfunding.com or any other firm that you can use to scale your capital, right? Without having to worry about, oh God, but moves don't always move like that. Like, I'm always looking for this. It just doesn't work. Why is that happening? I took so many sells here because it was a breakdown. But that's not how markets move. You need to first understand how underlying money enters the market. Confirm that with this as well, which is even easier to do, and then get involved using lower time frame SSCs now to get involved, or use the ICIs, because what's here? That's an ICI. On the 4 hour here, this is another fantastic opportunity to take during the week to take long. What's this right here? This is an ICI. This is another fantastic opportunity that you could have taken today on this 4 hour chart to start taking long. These are all phenomenal trades to the long side. Now, again, you wouldn't be targeting crazy. You'd probably be targeting like much less. Like, this has already moved 1 to 1, 1 to 2, 1 to 3, 1 to 4, 1 to 5. So based on how you manage this, this one is this has paid beyond itself, right? On a $2 million account, you've made, what is that? Because again, I know 2 million sounds like a lot to some people, but the point of being in this industry is that you're going to grow your account and you're probably going to surpass 2 million at some point, definitely. And even at 1% risk, you're talking about a 5RR gain. That's about 100K gained on a 4 hour chart with no issue with slippage or commissions because of the fact that you can trade a higher time frame with no issue, because you now understand how money moves into the market. And again, those are beautiful, beautiful setups. There's nothing wrong with them, and those can be part of your trade plan. Now, if that's not part of your trade plan, then as money is once again proving itself, that it's coming in on this 2.0 and now moving long, money's proven itself, money reaccumulation model's proving itself, the higher time frame is proving itself, this model's proving themselves, the sentiment is proving itself. God damn, what more do you need? Now you can trade that on a lower time frame if you wanted to. What's available on the lower time frame? Well, take a look, right? The 1 hour starts breaking down, and then you could even wait for the first break up to be certain of the long. You didn't have to use this, right? This again is money coming in, price comes to the 2.0, and from there, as it begins to move long, you can start following it. So then when it goes ICI, this is a phenomenal entry right here with no issue whatsoever to take long. That's a 1 hour based entry using the same methodology, the same repeatable confirmation. Super, super simple. Looking for an impulse, a correction, and an impulse, entering on the next impulse, simply because the model has shown you what it's doing. But you could have waited for price to re-break higher, and then it breaks higher. Now you're in bullish territory, okay? Then again, it goes ICI. You might have entered this trade here. Now again, as you enter that, because I'm not going to sit here and just show you wins, because that's complete bullshit. That's not how prices work. You're going to take a loss. It's going to happen. On the 1 hour, if this was a system you were trading, there's going to be losses. You cannot be correct every single time. But the beautiful thing about being with the context, with the money, is that even when you're wrong, you may be still correct long term, right? Now again, we keep watching. It's still bullish, it's still moving bullish. You have an ICI. Well, there's no reason you can't take this. Stop under the low, take it higher, and this is a trade that now would be profitable and running in profit beautifully for you, delivering already over 1 to 5 with a 20 pip stop, which means that you have no problem with commission or spread. If you're trading like a $2 million account, there's no issue there. And once again, you've milked the markets for more than you've ever made in your life, because you're now just following simple, static rules. Okay? Then again, you have an ICI. You could have taken this easily, stop loss under the low, take it higher as such. Now again, it moves about 1 to 3, 1 to Yeah, about 1 to 3 before coming to stop you at a break even or a loss. Now, I don't know if this would have been a loss, a break even, or a win for you. That's not up for me to determine. All I'm doing here in front of you is showing you firsthand how all week this week and for the last few weeks, how you could be getting involved using the exact same concepts I've taught on this channel over and over and over again. I haven't changed them. I haven't created inducement, flippy, dippy zones, some chalky, quappy, loppy, sigma zones, right? That has never been introduced. There was no need for that. There's an understanding behind how money's moving, how it's doing relatively across other pairs that are similar to that pair, how it now looks. So hopefully this is going to help you a lot. How it now looks in accordance to the daily sentiment of the institutions, right? And then whether or not you can take a trade based on the fact that it's just moving long, which it is. So whether it had money come in through SSC or through 2.0s, which is the same thing because they're cross time frame things that are happening, to get involved, right? This is a 2.0 based trade off of this, and then you have ICIs to go long. And today even you have an ICI moving long. So once again, if you had participated in this long through the high or through this high, it's up to you where you entered that. Stop under the low. Absolutely nothing wrong with this trade now based on your RRs. Whether if you're a 1-to-1 RR trader, you already made money. If you're 1 to 1.5, you already made money. If you're 1 to 2, you made money. If you're 1 to 3, you might be at break even. If you're 1 to 5, you might maybe move to half risk, whatever it might be. The point being is I'm showing you firsthand how you can enter into markets that are trending, moving, and not coming back to zones because it's not necessary to come back to zones. Waiting for prices to come back to zones basically limits the living shit out of you for what kind of trades are available to you every single day across all time frames based on the time frame that you want to trade. So you can make it work around your schedule, whether you work, whether you do something else, whether you have a family, whether you like to, I don't know, whatever you do. This is what's giving you the permission to do it as you wish. So if we're trading a 15-minute today, which was what I'm doing, right? What am I doing is I'm showing up. I'm looking for the same things just on a 15-minute because I'm willing to enter on a 15. I'm not going below 15-minute because at that point the stops get too tight for me. But again, I used to trade second charts, 1-minute charts when I had lower accounts around $1 million or so or less. If you're trading around that size of an account, you can get away with trading some lower time frames. That's fine. But as your account scales, which it should because that's what you're doing as a trader is scaling your account to the point where you can do less work for more money, then you're going to be upping your time frames. But notice how nothing here changes. So if you showed up here out of my basement today, what is price doing? Price broke down, so we start ignoring it. And then all of a sudden, price breaks long, right? You can see the little long break in here, right? Shown by this break. It broke long. So what am I looking for? I want to find ICIs that are moving long. Look what happens. Get an ICI. Price starts going sideways. What did I do? I took a long out of this, put my stop just a little bit under this body. I didn't want to use the wick just because it was too big of a stop there. You could have even done a stop like that, but that's up to your preference of risk. So I left it like this. Price began to go. I took a partial today at 1.9 RR about, I think like an hour ago. Yeah, about an hour ago. I took one at 1.9 RR for 50%. The rest is trailed under that low. So I actually just held on to it. And now hopefully we get an expansion again, right? Because look how price is moving. ICI. This is now going to be another potential entry. Now, this is something I'll teach in the private mentorship, but as more and more ICIs occur, the less likely a trade is going to work. So like right now we've had 1, 2, this is like the third. At the third, it gets a little iffy, but even at the third, it's okay. By the fourth and fifth ICI, you want to walk away and wait for a new reset in the actual ICIs. It's one of the best things you can do. So hopefully that teaches some of you or gives you a thing to add to your trading plans because that's very, very powerful, okay? But then, so in my basement, right, you come out of my basement and you go, what are we doing today? And I show you this. And we go, oh, we just broke bullish. Let's wait for an ICI. And you're like, oh, okay, that's it? Yeah. Oh, look, it's going sideways a little bit. Let's buy, stop through the high. What? That's it? But what about all the special analysis? What about the lower time frame? What about the FVGs and the imbalance hooks and the chick flip dips and the inducement of lows? What about all that? Go, I don't need that. I know where the money's heading. I know how it's moving. It's now moving bullish. It's confirmed the bullishness. Multiple time frames are confirming the bullishness. Relative strength is confirming the bullishness through my previous video and through this beautiful little sentiment that I've created for everyone. UJ has been showing relative bullishness because of the fact that it's now breaking long. I'm just going to get involved. We took the buy stop through it. Right there. That's the buy stop through it. Now I'll move it to the right just so you can see, because it looks like it took the stop. But it, you buy it through the high, so the stop was just on it like so, and price expands, right? Now let's say I missed that. Well, look what happens next. Price makes a move up, starts ICIing. There's another long right there through the high, right? Stop under the low or under the low that starts breaking out of the next candle. That's up to you. So that's up to you how you want to manage that. And this is, again, another perfectly valid trade. These setups happen every single day, everywhere. The only thing that you need to ask yourself is it happening on the time frame that I'm willing to trade? Is it happening within a market that is worthwhile to enter because of the context? Is the relative strength there for that market? Is money proving that it's behind that market? And is the trade still early in its trend, right? Is it early in its ICI? And if so, there's nothing wrong with taking it. And that's a beautiful trade for you to take. And that's exactly why, lo and behold, this week I took this trade here off of this beautiful little ICI here off the hourly. I'm just going to show you guys that right now. There it is. Right, there's better trades. There were trades all over, right? There's this ICI, then there's this ICI, then there's this ICI, then there's this ICI, and then I took this ICI. You can see the buy stop I took right here. Just like that. Stop was again under that body. I don't know why it moved over. And again, just partial this thing out. And then look what happened. It made another ICI. This was another great entry through the top, right? Absolutely nothing wrong with this. Stop loss under the low or lower. And again, same thing happens. It's up to you how you manage this. That might be a break even, might be a loss for you. But all I'm here to do right now is show you how markets move, how to establish the footprints, how to actually confirm them, and also to advertise a little bit about the free tool that I just made available that should be so helpful for you. And again, like I wrote here, private mentorship members have instant access to all of this for free always, of course, but there's also going to be a premium version with a lot more filters, a lot more pairs, and a lot more analysis of the data, right? Because it costs me money to run all this data and have it available to you, but I love doing this stuff. It's literally what I fucking live for. So I hope this helps a number of you for free. And this is very simply how I use ICIs to enter on any given day. This is a trade plan that you can personally follow on any time frame. And all you need to start looking for is markets that make sense, that are moving contextually well. And again, how do you do that? One, you can join up with a private mentorship and learn, but two, watch my previous videos. I have not stopped talking about the direction on this. I hope that a lot of you that made it this far in the video maybe have already seen my other videos because you watched this far, because many people don't make it this far ever. And you leave a little comment down below saying, mentfx has been saying this forever. I'm in his private mentorship. I've been listening to this. He's been saying it forever. I'm on his public videos on YouTube and he's been saying this forever. And all I've been doing is following longs and it continues moving long. And that's exactly what we do because we are trend followers. When money breaks down, we wait. We don't need to predict where it's going to stop. Where's it going to stop? We don't need to sell into it to stop it. We wait. Money will come in. The SSEs will prove themselves and price will begin its markup. And at that point, the ICIs or whatever your confirmation is becomes one of the most simple things to follow because then prices move basically like this. And if you get involved here or here or here or here, you can pull money out of the market on any time frame based on what works for you as a trader and what works around your schedule. So I hope this video gave you a little bit of help. I hope you learned a little something. I hope you join up, of course, because my main goal is to have a beautiful trade floor of amazing members that want to be there, right? There's no toxicity because when you have a paid group, that's what happens. You have people that want to be there, people that are actively working together, no bullshit, no dick measuring, no you're fucking wrong, none of that shit. We have an amazing group with amazing tools and we continue to make it better and better. So join up, or if you enjoyed this video, subscribe, like, blah, blah, blah. Love you guys. Thank you so much for watching and I'll see you all in the next one. Bye.
Bye.